Palantir Technologies is yet again at the crossroads of opportunity and skepticism. A roller coaster ride in the stock market fueled by the promise of artificial intelligence. But hold on tight because the analyst views are far from unanimous. They're clashing like titans, one side touting growth, the other cautioning restraint. In this video, the stage is set for an epic debate that will leave you questioning, is Palantir's AI hype truly worth the frenzy? So buckle up for a ride through contrasting narratives that will have you on the edge of your seat. Watch till the end because this isn't your ordinary stock story. It's a clash of visions, a battle of insights, and you're in for a front row seat. Palantir Technologies emerges onto the stage with a mix of intrigue and skepticism. Tech stock pros, those who serve as the bridge between tech and investment, have spoken. They've dialed down Palantir stock from a buy to a hold after its Q2 earnings reveal. Who are these tech stock pros, you ask? Think of them as the guides for retail investors, providing insights typically reserved for the big institutional players. But before we proceed, we would like to welcome you to Capitalista. Kindly take a moment to click on the like and subscribe buttons down below. Now, let's continue. Let's rewind a bit. Palantir's journey this year has been nothing short of astounding. Palantir Technologies had a staggering 167% surge in its stock, leaving the S&P 500 in the dust, trailing by a whopping 149%. Quite the showstopper, isn't it? So what's driving this meteoric rise? Cue the AI hype. Yes, you heard it right, artificial intelligence. Palantir's rumored dance with the AI has set the market abuzz. The first half of the year, it was a crescendo of excitement with the promise of game-changing AI initiatives pushing the stock to dazzling heights. In addition, Palantir's recent revenue growth took a bit of a detour. The numbers tell a story of 13% year-on-year increase and a modest 1.4% sequential bump, bringing the revenue tally to a robust $533 million for the quarter. Now, just 10 weeks ago, Palantir unfurled its grand plan, entered the stage, the Artificial Intelligence Platform or AIP. But despite all the AI buzz, the platform's impact on the revenue scene was, well, less than spectacular. The analysts over at Tech Stock Pros noticed something intriguing. They hinted that AIP's arrival wasn't quite the fireworks show it was expected to be. It seems like the spending environment wasn't exactly in party mode. That's right, the weaker spending vibe played a part in dimming the revenue glow that AIP was meant to cast. Now, there are clouds gathering at Palantir's horizon, and they go by the name of macro uncertainty. As the year's second half rolls in, it's like an intricate puzzle. These uncertainties are expected to play a role in shaping the company's revenue landscape. Now, why does this matter? Well, government revenue forms the backbone, accounting for a hefty 57% of the total sales. But here's the twist, the growth of this vital revenue stream has started to show signs of slowing down. Tech stock pros have been keenly observing this puzzle. What they found was the anticipation of these two macro uncertainties adds a touch of drama to the stock's risk profile. Now let's take a look at Palantir's Q2 earnings right on the mark, meeting those analysts' expectations. The numbers are dancing to a familiar tune, with an impressive year-to-date or YTD rally of 166%. But wait, there's a twist in the plot. A recent dip in the stock's momentum sparked by the earnings reveal. Surprisingly, despite this dip, the mood remains upbeat. It's like a sunbeam breaking through the clouds. This bullish sentiment is still here, shimmering. It's a tale of resilience in the face of turbulence, a belief that this dip is merely a momentary pause in a grand performance. Moreover, there's a promising trend in the earnings arena. FY24's estimates are on the rise, up by 4%, and the growth story doesn't stop there. FY23 sales are predicted to see a 16% year-on-year rise, reaching a $2.2 billion. Meanwhile, FY24 sales are projected to climb by a remarkable 18.6% YOY, reaching $2.62 billion. But Palantir's valuation isn't your everyday tale. It's got that premium flavor. This valuation dance needs a steady rhythm of growth to keep up. It's like a high-stakes performance. Maintaining high sales and earnings growth is the key to justifying this premium position. Another exciting twist in Palantir's story arrives through the voice of its CEO, Alex Karp. He's set his sights on something bold, monetizing AI, going beyond just crafting computer-generated poetry. Hold tight because Wedbush Securities has joined the scene, painting a bullish picture. They're convinced Palantir's an AI heavyweight, a core player in the field. But here's a dash of skepticism from RBC Capital Markets. They're waving a flag suggesting that Palantir's AI spread isn't as diverse as it seems. It's a narrative not truly different from what they've been selling. Now, Rishi Jaluria from RBC Capital Markets brings forth a concept, the self-fulfilling prophecy risk. As Palantir repeatedly speaks for its AI prowess, it's like weaving a spell. It could attract fresh customers, lure in new business opportunities even before the numbers show up. Imagine this perspective. By painting an AI-driven future again and again, Palantir could inspire companies to join the narrative. It's like a chain reaction. But hold on, the impact doesn't just stay in the realm of words. This sentiment, this attraction, it might just have a sway on the stock performance, especially in the short term. Now let's summarize the whirlwind journey through Palantir's landscape. We ventured into the heart of contrasting viewpoints, where analysts stand at crossroads, each painting a different picture of what's to come. On one side, tech stock pros pull back the reins, downgrading the stock from buy to hold. They cited the AI hype that lifted Palantir's YTD performance by a remarkable 167%. The launch of the artificial intelligence platform promised much, yet it seemed to stumble in the face of a weaker spending environment. Contrastingly, we've seen the bullish optimism from Yahoo's viewpoint. Palantir's earnings report met expectations, maintaining the staggering YTD rally. While the stock saw a temporary dip after the earnings release, a hint of bullish sentiment remains, suggesting potential for a continued upward trajectory. The tug-of-war intensifies with analysts from Wedbush Securities and RBC Capital Markets. One side believes that Palantir is on the brink of an AI revolution, with the potential to monetize AI initiatives across diverse sectors. On the flip side, skepticism arises, suggesting Palantir's AI offerings may not be as distinct as they claim. Amidst this clash of opinions, what should you take away? Critical analysis. Dive deep into the narratives, understanding the contrasting viewpoints, and uncover the layers beneath the surface. This isn't just about Palantir. It's a lesson in investing wisdom. Research, explore, and make informed choices. The world of stocks is a realm where perception meets reality, and the line between them can be both blurry and enlightening. So, what do you think of Palantir's position in the AI industry? Let us know in the comment section below. That's it for this video. Don't forget to express your gratitude by clicking on the thumbs up button, following Capitalista, and enabling notifications to stay updated and won't miss any of our future posts. See you next time and stay safe.